Go ahead and get the slides up if we can. Good morning. Well, let's try more enthusiasm. Good morning. Good morning. Excellent, much better. Hopefully, the intent of this is to get you speaking, because hopefully, as Brooke said, our goal is to get to, wrong slides. Our goal is to actually get you all engaged in this conversation. So thank you all. Really looking forward to having this conversation. As Brooke said, because of our time constraints, really just going to focus on introducing a couple points as soon as we can get these slides up. But nonetheless, we're going to try to shift the conversation to much more of an investor conversation. So much in particular, my remarks today are going to be absolutely targeted to all of us, not just those that are here, because in one form or another, all of us are investing our time, our talents, and our treasures towards these issue areas. So let me see what's happening there. Any luck? All right. Well, while we're waiting for the slides, let me just talk briefly about what the slides are going to say, and then we'll get them up here. So first thing I wanted to talk about is really that, for those of you in the room that have been with us since the beginning, we've really been hearing since the inception of this conversation with the talks that we had over dinner a couple nights ago, and throughout the course of the day, we've been really hearing that unquestionably there are key driving factors that are leading towards really what is the investment opportunity that is represented by resilience and sustainability. Anything we're talking about, there's no question when we've heard a lot about we've heard a considerable amount of information about what those economic factors are and how this has been translated into real economic opportunity. We've heard no shortage of information around the social and demographic factors which are driving these ideas. And of course, we've heard no shortage of information about, from a climate and environmental perspective, what are those factors that are really driving this opportunity. But against all that great enthusiasm and energy and clearly demonstrable support for these ideas, as an industry, we really still suffer from what I believe are kind of four key challenges that are really preventing us from, in effect, mainstreaming these ideas and taking them out of individuals or small organizations and making them part of what is kind of what I believe kind of the global capital markets and the global financial services industry. And those four, the first one of those things I want to highlight is one of inconsistencies in use of language. And this is a real impediment. We heard that in particular for those of you that participated. We're here in the marketing session of the conversation. And what's incredible is that we not only have we not only have misuse and inconsistent use of language within, as Freya taught us, the Green Pioneers. If we can't even get it together within our little group, how do we have any hope of then engaging those gold prospectors and those bricks? So one of the things as an industry, we really need to kind of stop some of the bickering and get to some real, and just recognize and accept and try to build some unity around language, so that when, for example, when those who saw the press release yesterday, Swiss Re announced committing 130 billion of their assets now to ethical investing, and you hear another announcement, someone else is doing responsible investing, and foundations saying we're doing mission-related investing and program-related investing and sustainability investing and impact investing. We have all this language that's out there that really doesn't really help ourselves, let alone help us then take that message. So that's the first issue I wanted to talk about. The second issue that we have we continue to suffer from real misconceptions around risk and return. And in the fact that, more often than not, when in a room such as this, and generally speaking, people believe that the intent or the desire to pursue positive social and environmental benefits inherently requires a greater risk. Or you're trading off something for that, and I was going to have a slide to show you that. Well, in some cases that's not. In many cases, we've demonstrated that that's not the case. And what's really important there to understand and recognize is first of all, all investing has impact. So even though we as an industry, we've chosen to kind of coin this word impact investing, we have to all remember that every single investment that is made in the world has an impact beyond the financial. And all we've done as an industry is decided to say, well, wait, let's look at that, let's understand that, and let's ensure that we can move towards impact that and target and recognize those impacts and seek a more positive social or environmental measurable impact, as opposed to not even being aware of these things. That notion of measuring impact is the third thing that we suffer as an industry. There a lot of concerns and complexities, and basically almost what I like to call kind of analysis paralysis. People who, because of the idea or inability to feel that they can properly measure impact, as a result of that, they choose not to take action towards these things. And so it's really important that, again, this is an area where we continue to work on as an industry. And the fourth point, here we go. Go ahead and jump up to the... There you go. Perfect. So the last thing is the last issue that we're going to have to overcome as an industry is what I talk about is the democratization of access to the investment world, to these investments. Right now, the majority of the investments that you've even heard about today and yesterday and over the course of this are really things that are available and open to the more affluent, large foundations, institutional investors. And what we really need to see is ultimately these opportunities being much more, in effect, made available and democratized, so that anyone from from their 401k to across the spectrum in terms of assets can have an ability to do that. There's no time in the moments that I have to unpack each of these, but I did want to just, for today's conversation, I wanted to hit really quickly the misperceptions of risk and on the complexity. Two things to keep in mind. Everything I'm about to flash you through is available on our website. And in addition, hopefully, shortly this afternoon at some point, a kind of pre-reading, some reading materials, a little primer we put together for the Institute that covers some of these things. So just to hit those two issues really fast. One, performance. Not a complete comprehensive study, but nonetheless, we're very fortunate to work with the Kale Felicitas Foundation, which allows us to actually publish the results. What you're seeing here is a portfolio that has moved, this is 10-year returns of a portfolio that moved to 100% impact. And what you're seeing here, the key takeaway is the blue bar is the foundation's return, the light blue bar are the traditional financial market indices. And so you can see in each relevant time period, the blue bar is bigger than the light blue bar. So back to that notion or idea that, to do this work, you have to take greater risk. Well, we've demonstrated in one portfolio, and actually many others, we can only publish one, that it has been quite the opposite case in that we've been able to achieve greater returns. When it comes to measuring impact, a couple things to take in mind. Yes, it's complex. Yes, the work has to be done. And there is a natural bifurcation how one can measure impact in, say, public market investing versus private market investing. So here's a glimpse into just some of the public market investing. This is specifically focusing around the notion of climate and water. And what you're seeing here is in the same way we just looked at financially benchmarking a portfolio against its non-impact benchmark. What you're seeing here in the kind of beigeish bar, that is the global equities, that is the MSCI ACWI, All Country World Index. And what you're seeing in the green bar is a sustainability, kind of thematically impactful portfolio that we run in this strategy. And here again, what you can see is a couple quick things in almost all time, in all forms of measurement, in terms of carbon emissions, in terms of carbon emission intensities, in terms of sales year over year, and in terms of water withdrawals, you're able to build a portfolio that, as you saw from the previous slide, not only outperforms financially, but actually outperforms considerably from an impact perspective as well. And when it comes to measuring things in the private side, I just chose here to pull out on clean power. Here you move from measuring kind of these big ideas around those types of factors, and you're able to focus on very specific factors. So for example, in clean power, for each of the key themes that we target, we develop a series of core impact indicators, supplemental indicators, as well as then look at kind of international standards. And here again, you can just see from the clean power portion of the portfolio I just showed you a few minutes ago, you can see here that for last year, both in North America and Africa, 400,000. Not only did you achieve returns, but you've now provided access to energy to 435,000, to clean energy, renewable energy to 435,000 people in the U.S., another 366,000 people in Africa. You can see the greenhouse gas reduction. So this notion or this idea that this work can't be done is again, it's a fallacy. It can be done, should be done, and we need to continue to do this work as an industry. Again, all these things are available for download on our website. Hopefully that report will be here available later, and we'll leave it there.